Right, thanks for staying with us. Devin Shutte from the Robert Group in KwaZulu-Natal and myself talking about the business of high-protein meat products.
Yeah.
Like said, delicious-looking uncooked bacon on the table here. Maybe we should break and find someone to prepare this for us.
I'm getting hungry. I don't know about you. Yeah.
Right, we're going to talk about famous brands next. Why? Well, because you can imagine in all of the steers, Wimpys and Debonairs, Tashas and all the other places that they have meat processing going on. They've got some divisions which they've bought their way into in order to capture more margin there, as well as relationships with big farmers. 13.2 billion rands worth of market cap. Price earnings ratio 30.9 tells you this is a company that's highly regarded and growing. Dividend yield only 1.63%, and it has missed a few dividends historically over time.
Just starting with the latest results.
Okay, good.
Yeah.
Well, let's go and have a look at the share chart as we usually do. So 5 years reveals, you know, a nice surge there. It's also come off a little bit there, hanging in there, hanging around. You like famous brands, Devin?
I do. I mean, that steep drop is the recent results where they cut the dividend, I think, for the first time in 10 years odd. And why that is because they've been on the acquisition trail again. I think in the last financial year they had 7 acquisitions, of which the Gourmet Burger Kitchen was the biggest they've done to date.
That's the UK-based specialty burger, builder burger kind of store. Very nice.
Cost them a lot of money, and what was different about that, they called it transformational, is that it moved them from a franchise or, you know, selling franchises to actually being a restaurant owner. So that created a lot more.
Is that because that particular chain is largely corporate owned? It's not a franchise type situation.
Correct.
Plus it introduces global earnings other than their previous attempts at doing sort of steers in a very small way internationally.
But what we like about the business is that vertigrated model where they've got the restaurants.
Vertigrated, is that a new English word?
Vertigrated.
I like it.
Vertigrated, yeah. A vertical integrated model.
It's much more time consuming just to say vertigrated.
Exactly. The vertigrated model is where you've got the restaurants, you've got the retail, logistics and manufacturing.
Make the sauces, make the patties, cook the whole thing, because then you capture the whole margin.
That's it. You know, every step in that has a markup, and you can imagine the meat processing required in the steers, and the like of those in these groups.
Because the business they bought was called Cater Chain. So this was a business that did a lot of abattoiring and preparation of food. So they brought that in-house. And in addition to that, they bought something called the Choice Meat Company, which included the provision to the turn and tender chain. And that they own 51% of. So that's the kind of thing you want to be involved with. 900 tons a month of meat being processed. And that's in addition to relationships that they have directly. One of our clients at Vestact is a chap who has a series of pig farms out in the Middelburg area with a massive herd of pigs, and his core customer is the Famous Brands Group, manufacturing, you know, the Mac rib products and all the bacon that goes into all of the burgers at steers and all over the place.
Yeah, I mean, the scale of this group is significant, right? And they've got, you know, really impressive brand of, I mean, a portfolio of brands, restaurants, casual dining, fast foods, even catering now. So yeah, there's a lot to be said for it, and I think they control the quality, they control the pricing with that vertigration. So I'm going to start that. Yeah.
So we're hot on this one.
Yes, I mean, I think the shareholders were disappointed with the cut of the dividend. They've said it probably will resume next year. This is just they don't want to get overextended in terms of the gearing on the balance sheet, and I understand that. So I'm happy to pick it up at the weekends.
And again, what we're doing here is we're saying, look, this is a secular grower through good times and bad in a transforming middle class growing economy. So don't get flustered by, you know, sort of momentary trouble politically or in the economy and all that. Just stick to your knitting, buy companies like this and hold them for the long term.
Correct. And I mean, you know, consumer spending and sentiment is cyclical, and we're in a trough at the moment. That will improve at some stage and they'll benefit. Yeah,
good. Right, hot on that one.